Okay, so we want to complete group chapter 23, talking about decision making. So it looks like Calla Company produces skateboards. They sell for $50 per unit. The company currently has capacity to produce 90,000 skateboards per year, but it's selling 80,000 skateboards per year. Annual cost for 80,000 skateboards follow. So here's our direct material, direct labor, our overhead, our selling expenses, and admin expenses. So here's the different decisions we might have. So a new retail store is offered to buy 10,000 skateboards, but for $45 per unit. We normally sell for $50. $45 per unit is the special order price. Stores in a different market from our regular customers wouldn't affect our regular sales, so therefore we have no opportunity cost, I would say. Study of its cost in anticipation of this additional business reveals the following. Direct material and labor are 100% variable, so these two things are 100% variable. 30% of overhead is fixed at any production level between 80 and 90,000 units. That's our relevant range, right? 80 to 90,000 units. And this overhead is 30% fixed, meaning that 70% is going to be variable with respect to volume. Good to know. I'm glad they just went ahead and gave it to us. If you remember, what would we have to do? If we didn't know what this was already, we would have to go and do the high-low method or a scatter diagram or a least squares regression. Selling expenses are 60% variable. So right here, selling expenses 60% variable, meaning 40% is going to be fixed. There's going to be an additional $2 per unit selling expense for the special order, and administrative expenses would increase by a $1,000 fixed amount. Knowing all that, we want to prepare a 3-column comparative income statement that reports the following. Annual income without the special order. That's our normal volume. Our annual income from the special order, that's going to be our additional volume. And then combined annual income, basically bringing those two things together. So how would we approach this? Well, I think the first thing that we should do is we should just flesh out what this left side looks like. This is an income statement, folks. We always start it with sales, no matter what. And then it asks us for our costs and expenses. Okay, well, we need to hit our variables, right? So let's start with direct material. Then we're going to have direct labor in there. We're certainly going to have some overhead going on. I mean, these things are right up here. I mean, we just put them in the exact same order. We've got selling expenses in there. We've got administrative expenses. And that's really all of it. I mean, that's everything that's up there. That gives us total cost and then operating income. So let's talk about our normal volume. How do we end up getting to normal volume? Well, we normally sell 80,000 units at $50 per unit, right? I think that's around 4 million, so 80,000 times 50. Yep, 4 million bucks. That's going to be our normal volume. Nope, except I need another zero. Okay. Direct materials at normal volume. Okay, I think we can probably figure that one out too, right? So if we go up here and we look at direct materials, if it's 800,000, it's 800,000. They've already done the math. This is at our normal volume. I don't have to go break this down to a per unit cost. Direct materials, 800. Thing gives me trouble. 800,000. It already tells us that direct labor is 640,000. Overhead was 960,000. This is just our normal volume. This is what we already know. Our selling expenses are 560,000. And our administrative expenses are 480,000. That said, we have an operating income of 560,000. That's probably the easiest part of it, but now we've got to get into the additional volume piece. What is that going to look like? Well, the special order is 10,000 skateboards at $45 per unit. Well, if you do that math, 10,000 times 45 is 450,000. Now is where we kind of run into trouble because we need to know what the per unit cost is for direct materials. Well, if it was 800,000 when I produced 80,000 units, then direct material is 10,000. If I'm now $10 per unit. If I'm producing 10,000 units at $10 per unit, I have $100,000 in direct material. Everybody see that? $100,000. I took 800,000 divided by the 80,000 normal units, because that's how many we produced here, to get $10 per unit, multiplied that $10 per unit times the 10,000 unit special order. I have to do the same thing here. So 640,000 divided by 80,000 should be 8 times my 10,000 units gives me 80,000 for direct labor. Then I get down to my overhead. Well, I could take the whole 960,000 back, but I think there might be something else I need to look at, and it's right here. It says 30% of overhead is fixed at any production level from 80,000 to 90,000. The remaining 70% of annual overhead costs are variable with respect to volume. Well, that's a trick, right? So I've got to take 70% of this number first. 960,000 times 0.7 is 672,000. So the variable piece at 80,000 units is 672,000. So now I divide that by 80,000 to get my variable unit rate of $8.40. I take the $8.40 now times my 10,000 unit order to come up to 84,000 overhead. I'm going to run that one more time for you. Overhead's 960,000, but they're telling us that only 70% of it is variable. We've got to take out the fixed piece. You can't do the fixed piece in incremental income. So if 70% of it's variable, we need to find 70% of this number. 960,000 times 0.7 gives me 70% of that number, which is 672,000. Well, this number is based on 80,000 unit sales. So if 672,000 is the variable piece at 80,000 units, to find the variable portion, I divide that by the 80,000 to get my per unit variable cost for overhead of $8.40. Because the new order is 10,000 units, I take the $8.40 and I multiply that by the 10,000, and I get $84,000 for overhead. Okay? Selling expenses. Again, something different. It says that 60% is variable. So let's take a look at that first. We do the same thing. 560 times 0.6 gives me my variable piece, which is 336,000 divided by 80,000 units. That's 420. However, it also says that there's going to be an additional $2 per unit selling expense. So the 420 is the variable piece of this, but then I need to add in that $2. So plus $2 gives me $6.20 times 10,000 to give me 62,000 in selling expenses. The administrative piece is probably the easiest. Administrative is all fixed. However, there's going to be an additional $1,000 fixed amount for the incremental piece. So we just put in the 1,000 there. And once we do that, we see that this additional volume is going to make us $123,000. The combined total will be $683,000. I'm going to go ahead and hit check my work and see how that looks. And it is saying that the answer is complete and correct. I feel good about it.